Investing Insights with Right Property Group, exploring trends in real estate and helping property investors gain financial security.
G'day everyone, how you going? Phil Tarrant, co-host of Investing Insights of the Right Property Group, joined by Stephen Waters and Victor Kumar, directors, Right Property Group. Gents, how's it going?
It's going all right. It's John Law's, what was his sign off? It was, hello world or something, or goodbye world.
Goodbye
Yours is
world.
just how's it going?
How's it going?
How's it going?
And,
Can't get the Westie out of him, eh?
No,
and you spell that OWISGOERN.
If you do want a bit of a laugh, you should listen to this podcast at half speed, as we've done from
Maybe
time
we can
to
do
time.
it as a Christmas special.
Or the outtakes. Well, there is no
maybe.
outtakes because we never edit. It's just all one.
Yeah,
Well, it's
that's
the
right.
occasional. I reckon out of, how many shows have we done now? It's got to be
4 years, almost
50 plus.
3.5 years worth.
Yeah, 3.5. I reckon there may have been maybe 3 or 4 edits over that many years.
Inappropriate jokes, that's why we have to edit
probably.
that. Yes.
But speaking about your xenophobia against us Westies, Stephen, and I like to reference pop culture.
WLM.
I like to reference pop culture. I don't know if you saw it on the interweb. So Shaw, so we're recording in North Sydney here, Shaw School, which is just up the road here. Nice school, fancy school, expensive school, $30,000+ a year to go to it.
A term.
And they did a year 12 muck-up. And bear with me because it's connected. They did a year 12 muck-up, like prank, made a video or something or other. And they went around and interviewed like kids in year 7 and 8 and some other kids and stuff, pretty much going, and it's not good PR for the school, right? But it's pretty much, where is the crappiest suburb in Sydney? So they'll beaten up suburbs. Guess what suburb they said? Or there's 2 suburbs, but one in particular.
I'm not even going to put my foot in there.
Lavender Bay.
Blacktown.
Really?
Blacktown, because it's full of housos and druggos, they reckon. But, geez, it's good to invest in property out there.
Is that what they said?
No, that's what I'm saying.
Oh, right. Yeah. Probably not the best reflection on the school.
It's not. And I think there's probably going to get some kids a little bit of slap over the wrist, but that's not what we're talking about here, to talk about property investment and people sort of going, these perceived ideas. And it was just as, I grew up in Blacktown, as you know, the perceived idea back then, 20 plus years later, it's still the same. The western suburbs is scabby and it's crap. Anyway, a fifth of Australia lives in the west and southwest area of Sydney. This is Australia. Australia.
What's interesting, though, is that in that Blacktown council area, which is quite a large council area, one of the biggest in Australia, in fact, you can pay as little as $300,000 for a 2-bedroom unit, but you can also pay up to
$2
million for a normal house. I bet the kids over at that particular school don't realise that there's actually some property in Blacktown Shire that's more expensive than potentially where they live.
And this is not a beat up on that school at all. It's largely irrelevant. But what it is a bit of an insight into how people have assumptions around particular areas, how people have perceived bias on particular areas, and how, because of those biases or those perceptions or just a view on a particular trend, they get it wrong and they miss out on opportunities. And, I wanted to use this as an opportunity, guys, today, is to look at, we're in a state of flux right now. No one knows what's going on. COVID, all this sort of stuff. We've spoken about at length, but there is so many, in inverted commas, facts out there right now which people are shaping investment decisions on wrongly. And I want to get into it. You guys are a lot closer to it than I am. And I think let's get smack bang into it. And let's start at the beginning. COVID hits. Some of the major banks in the land, Steve, came out and said there's a good chance there may be 40% drops in
30.
prices. Then it was 30.
Then it was 20.
Then it was 20.
Then it was 10.
Then it was 10.
And the most recent is 5 from, I believe it was Westpac.
Westpac. I've got some numbers here and I'll run through them in a moment. So people over the last 6 months, let's call this trend number 1, have been making investment decisions, investing in property on the fact that prices are going to drop, according to a major bank, by 40%. Yes, let's buy property.
Yeah, look, I think it's actually fascinating, and it happens whenever there is a problem or a crisis. And we can't go past the fact that every couple of years there is a crisis of some form. Right now we happen to have COVID. Before that it was the Royal Commission. Before that it was APRA. Before that there was the stock market crash. Then there was the GFC. We can keep rewinding back forever. And unfortunately or fortunately, whichever way you want to really look at it, there is always going to be commentary and opinion based around the result of those crises.
Absolutely, these. Yeah.
Now, there are some that are sitting on the positive side of the fence, and there are some that pray for the negative to actually come true for whatever the reason or agenda may be. But we still can't, it's a secure asset class. It's the flight to safety asset class, being property. And no matter what happens, and it's a well-worn expression that everybody needs a roof over their head, but it's well-worn because it's true. And so there are certain factors within the market, there are certain levers that have been pulled during each crisis that puts a floor in that perceived tumble, or even if it just finds its own bottom. Even if we go back to the GFC, there were plenty of people making money.
Us included.
Buying and selling during the GFC. Just because a crisis is there doesn't mean the buyers disappear. Doesn't mean that the properties disappear as such. But if we come back to the now and the crisis that we have now, and there's probably been 1 million articles and 50,000 podcasts around COVID and the ramifications of COVID or what could potentially happen, there's a big difference between what we are seeing versus what has been written or talked about, both on the positive and negative. Some of it's true or slightly true, but I would dare say that the majority is wildly inaccurate. And the reason it's inaccurate is because it's a general opinion as opposed to a focused opinion. 15,000 suburbs as opposed to one market.
Yeah. And I think when you look at crises, any crisis that happens, one of the first things people do that are in a decision-making process is they look at it from, okay, where can I get the information from? What can I get from the media, particularly now? The headlines, or they start dictating their decision-making process. So when they are unable to make decisions because there isn't a clear enough direction, the safest thing in their mind is to do nothing. So therefore, it can become self-perpetuating where, we say, see, I told you that there will be less buyers in the market. See, I told you that prices will drop, because people feed off each other. I remember a long time ago, I read a book, Richest Man in Babylon. And one of the stories in there was about the fish and chips guy. And I don't know whether it was actually in the book or whether it was the rebranding that someone had done. So this guy goes and buys fish and chips, and the fish and chips is wrapped in newspaper. And as he's having the fish and chips sitting on the park, he reads there that property markets are going to crash and the economy is going to go down by 50% or whatever it was. So he was a architect. So he went to his person who had commissioned a portrait, cancelled that based on that article. The person that had the commission for the portrait had, off the back of that, told the jeweler in the village that he was going to buy some jewels and put the order in. So he's gone and cancelled it. So I did that all around based on this one article. And later on, it was found that the article was probably about 3 years old, right? So people do make these decisions based on articles, based on what everyone else is saying. This is where, when you're investing, regardless of where the market is, if it's high, low, going sideways, you invest using fundamentals. You invest using fundamentals that are pertinent to you. And coming back to our Blacktown example, you then also need to set aside the opinions and the perceptions of other people, set aside the data fluff, and come to the real data and correlate that to what's happening on the ground. So, Steve, earlier on, we were talking about how the rental market, in our experience, is totally different to what the media is portraying the rental market to be.
Yeah, absolutely. And I want to get into the rental market because it's one of these key trends that I want to look at. But before we go there, Victor, I just want to, a couple of things. Blacktown, we're using Blacktown as an example because most people will be in Sydney will be understand Blacktown. I like to fly the flag for Blacktown, by the way. It's a great place to live. We're talking about trends,
it's
right?
Market manipulation. He's got a few places there.
And if the mayor of Blacktown wants to come on for a chat, happy to do that.
I could probably arrange that for you.
Probably give you guys the keys to the city. Yeah, maybe. We could get a parade at the Blacktown float. I remember going to that as a kid. I could cook some sausages on the side, anyway.
No, slip on the onions.
But we're talking about trends, and rental markets is one of those trends, and we're going to dig into that. But let's talk about what a trend is.
Yes.
And what are the origins of trends? it sounds like the origins of species, right? But, you can channel anyway, you probably never read that. Sorry.
Slap.
Do you see how quick that was?
Without even taking a breath, you didn't even stop. You just kept
For the
going.
listeners,
Well, I'm trying to have an educated
Conversation with Vic and just clearly
academic
leaving me out.
discussion.
Right,
I don't know. Victor he embraces academia like myself, but let's talk about the origin of trends. Now, is a
I'm
trend?
sorry, you should have seen Steve's face.
I'm going to go have a lay down. Let's get some counselling.
The origin of trends. Now, is a trend what everyone is talking about because comes out of someone reads it in the fish and chip newspaper, or is a trend actually created by someone who actually has information that tries to start a trend, or is a trend just an organic sentiment about where we're heading right now? Because we're talking about people making investment decisions on what's being perceived to be a trend, a downward trend in prices, because one or a number of the big banks came out saying numbers are going to drop.
Yep.
Is that a trend then, or is that predicting a trend? And how do you know whether or not a trend is really fact-based?
Yeah. So really there are two types of trends, right? One is the fundamental trend, what the area always consistently does, and you iron it out over 10, 15, 20 years and say this area has consistently done this. It's likely to do X based on backward-facing data. And you're looking at the changes that are happening in the area and saying that here's our baseline momentum in this area. And by putting this catalyst in, it's either going to slow it down or move it fast. Then there comes the new age trend, which is your social media trend or your bank prediction trend, which is more of a herd mentality in the sense that, let's say, well, I'll use mining towns as an example, right? So when the mining boom happens, the people start buying there, and during the initial construction phase, the trend there is that the rents keep climbing rapidly, the prices follow rapidly, and everyone's jumping into it because everyone's talking about how great a yield they're getting, how great the equity increase they're getting. That's a transient trend fueled by me talking to you, you talking to someone else, and then that creates a ground swell where they're ignoring the fundamentals. And the fundamentals there's apart from mining, there's nothing else. Mining, if it slows down, when it goes from your construction phase into operational phase, obviously there'll be less people required in this, so employment drops. And so therefore the prices drop and the yields start dropping rapidly. And you start, because you've followed the groundswell trend, you are now left exposed because you owe more money on the property than what it's worth because you've basically pulled all your money back out and so forth, right? So that's the trend, that's the dangerous trend where you're following the herd, we're following what the media is portraying, what the major commentators without the years and years and years of knowledge on the ground are commenting, and you're basing your decisions on buying or selling or holding on based on what they are saying.
So how do you sniff out whether the trend that you're making investment decisions on is a good trend?
Look, it still comes back to you need to know the area, right? You can't predict trend based on desktop data. You need to correlate that to what's actually happening on the ground. I know there are a lot of trendy thoughts right now, if I can use that segue, of people saying that, you can do stuff based just on data and interpret that and it gives you the decision to buy or not to buy. I can tell you many areas that I've had a lot of my contacts put in front of me where all the data points to, yes, you should buy in here, but when we go physically on the ground and do the actual due diligence, it's not a buying area, right? It's just a flash in the pan. Whereas there are other areas where the data clearly says that now it's not going to go anywhere, yet it's going gangbusters. Now, I'll give you an example just post GFC for this. And Steve, you recall this in a suburb called Rosemeadow in New South Wales, where a section of it was Housing Commission. And what Housing Commission was doing there was that for townhouses in a row, they were knocking down the townhouses in the middle, creating yards, and selling that to existing dwellings, to remaining dwellings, to owner-occupier. So the clause there was that only an owner-occupier could buy it, and only an owner-occupier could on-sell it to another owner-occupier in the first 11 years. So in other words, you had to own that property for 11 years before you could even rent it out, right? Now the data on desktop was showing declining population, declining value, Yet on the ground truth there was that the area was changing immensely from the demographic point of view. The reason why it was declining was knocking down 2 houses, so those tenants got displaced. And the reason why the prices were going down was the fact that it had the owner-occupier covenant on it, and therefore the properties were sold at a 20% discount in comparison to a property that didn't have that covenant where you could rent it out. So there's a big mismatch in your data in terms of what was on the desktop and what was actually happening on the ground. So you need to correlate the two before you can make buying decisions.
That in itself, there's several trends that were happening in that instance. And one of them is, and you mentioned it was the declining population because of the way that the households were reduced, or the household numbers were reduced. And as a top line, most people will think that a declining population is a bad thing, when in real terms, there's every bit as equal chance for it to be a positive thing for the locality if the population is decreasing. So it's not just about identifying the trends, it's also about understanding the trends. And as you were talking just then, and Phil was avidly listening,
and you were sulking in your corner.
I was sulking in my corner because I didn't get a chance. But I brought up something that I was in the midst of writing and talking about the different types of investors. I wasn't writing it now, by the way. You
can multitask as well.
I cannot do that. But the different types of investors, which is one of them is the momentum investor, which is the investor that follows trends. They don't necessarily understand the trends, but they're a trend investor. So if they might see a population increase or they might see a price increase over a period of time, but it's about the momentum without really a lot of diligence in behind it, as opposed to, say, the contrarian investor that really goes against the grain. You know, if everyone's going this way, they'll go that way. But the trends that we are seeing at this point in time don't make a lot of sense unless you really get granular and you get down to ground level, as opposed to just trying to understand the data, which unfortunately is what the media does, is it's just all data driven.
And it's a really important point. And, for trendsetters, who was that, Ronnie Root or Kevin Wilson? Trendsetters.
Well, it's certainly not you with looking what you're wearing. But
okay, well, speaking about fashion then, something seen that you're so well dressed, you'll appreciate this analogy. What's in vogue is the basis of trend setting, right? So, that's in vogue right now. That's in vogue right now, which was at a point in time, you used to pick up this magazine and every woman would make their buying decisions on fashion for the season ahead based on what was in vogue. So Vogue had a real huge responsibility. They got it right sometimes. They got it horribly wrong sometimes, to say, if this piece of fashion is in this magazine, that means you need to do that right now. What is the property equivalent, Stephen, fashion forward, of in vogue?
Ooh. What's
in vogue? Because this is what we're talking about, setting trends, origin of trends right now. Fashion, vogue, property. It comes back to the media, though, because that's what's got the voice. And the issue we have today is that, going back to responsibility and accountability, Vogue probably, there was less decisions to be made, hence the reason why it was in one thing. Now we have social media, so everyone sets trends now. So
the loudest person,
whoever is the loudest sets a trend, and that's a horribly dangerous thing.
Well, we talked about that, I don't know how many podcasts ago it was, about one of the clear differences between today's crisis and the GFC was largely
information,
which is around social media. We can argue that till the cows come home, but at the end of the day, everybody today that owns a phone with a camera is a journalist of some way, shape or form. Or they're a reporter, maybe not a journalist, they're a reporter. And
they've got an opinion.
Correct. Yeah. Whereas I'm sure journalists
shouldn't have an opinion. We report the facts. Hence the reason why smart property investment is in vogue.
Do you know, all I can think of when you keep saying in vogue?
I like that.
Have you seen, I don't know if you ever saw those magazines where they have the most weirdest eclectic outfits. Like they were never.
You just go, who would wear that?
Yeah.
Why is that in Milan right now? I've never seen anyone wearing that on.
Correct. Well, there's probably some of that around property as well. Like, why the hell would you buy that in that area and so on? But everybody.
Let's challenge Victor. I want Victor to pen a blog post using this analogy of
Vogue.
Okay. I think that would be really, really, you'd probably have a lot of fun with it. Anyway.
I don't know if he's ever seen the Have you ever seen the magazine
Yes,
Vogue?
I have actually.
Okay.
Yeah. You know, there were magazines in Fiji, yeah? We used it to wrap fish and chips, by the way.
The richest man in Babylon.
I just read there's got to be another coup, Stephen. probably how they started, right?
That's it, yeah.
Anyway.
There's a little bit of truth behind that because many, many moons ago when I didn't really know what I was doing and I was buying just for the hell of it, this is going back 20 years ago, I bought
Magazines or properties?
Properties. Yeah. The magazines when I was at school. But we bought a piece of an island over in Fiji. There was about 20, about 20 of us. We all pulled together and we bought this island of some American...
Freehold.
Yeah. It was one of the... Well, it was back then. I'm not even sure it exists, which is the point of my story. Because we all pulled together and we bought this island. I don't know if it was 20 acres off God knows where. I can't even remember the name of it. But we got the title and everything like that. But then as all good ideas and ventures begin, we all lost interest in a part of the world that was perhaps not as under control as we would like it to be. So we don't even know if we still got that piece of
real estate
surrounded by water, going underwater in the midst of a coup. But Vix is our eyes and ears on the ground.
He is. He's our man in Fiji, and they're talking about the Bula bubble. It's going to open up. Trends.
He brought us back to it. Yep.
No, but this like you can go completely wrong on trends, right? And that's how most property investors go wrong because they've used the wrong information to set themselves. Now,
well, let's get away from the trends though. Let's get around to the real reporting, to be fair, and the numbers and the predictions versus what's really happened, because the trends will continue to unroll and they will continue to, I don't know, be argued.
Well, let's round out then. So we're chatting about beforehand what the perceived idea around property prices, driven by information that you would assume you could trust and respect, right? Major banks in Australia who all have a vested interest in sustaining property pricing. Now, Tim Lawless, head of research called Logic, who you guys know, I had a chat with him recently, and he wrote a piece here. Westpac, well-respected economics team, have released an update on their housing market forecasts with an expected 5% drop in housing values from peak to trough, revised from early expectations of 10. That's where Westpac was originally. By June next year, Westpac are expecting Melbourne values to be down 12% and only drop 5% drop across Sydney and 2% fall in Brisbane, while Perth is forecast to be flat and Adelaide up 2%. Longer term, Victor, Westpac are forecasting a sustained upswing with national housing values expected to rise 15% over the following 2-year period. Brisbane 20%, Perth 18% stand out for the highest forecast capital growth over this period. Quite different to the most recent growth cycles where Sydney and Melbourne have dominated capital gains.
Now this is, you mentioned, it was a critical phrase in there, general or the national, whichever way they wanted to put it. And even though if we just take the 5% decline or contraction in price, that's a general number. That also means that there's potentially areas that are going to go down 3 times more than that. They might go down there 20%, but there are also areas that will go up in value. That's how we get to that average. Looking further ahead, though, I think it was 21-22 or 22-23 when they predictions were for the prices to gain momentum.
Yeah.
It's important that we always keep very close to us the reason that we're investing in property, and that is for the long term. So if you're trying to pick the bottom of a market, that's a very bad and dangerous investment strategy, because even if we just relate to the Westpac numbers or predictions, they're going to be wildly inaccurate in certain areas. So let's talk about what, in terms of that data, let's talk about what we are seeing on the ground right now. And I can tell you as I stand here today, there are areas that during COVID have increased by 10%.
They have.
Are you going to tell us where?
No, I'm not. Well, I'll tell Vic. No, there are certain parts of the Sydney Greater Basin that have increased by 10%.
Yep. There
are certain parts of Brisbane that have increased, let me say, by 5%. There are certain parts of Perth that have increased by 5 to 8%. Now, certain parts, not everywhere, because when you get down to a micro level, it does become suburb orientated.
Right down to the streets.
Within the suburb, it comes down to the street, and within the street, it comes down to the house a lot of times. So that's from a value point of view. If we talk about from a vacancy point of view, and I did put a post up on our...
That was a very good post, by the way. I enjoyed that, and I've been using it. But I don't say it's mine. I say I always reference you when I do it. I think you assessed the 57 zones around rental markets, and the numbers that you presented to me were quite a shock when I read it. It was like, so there is this idea, if you listen to certain areas, that there's for lease signs up everywhere and property investors are hemorrhaging money because they can't find tenants. Fact or fiction?
Fact in some places and fiction in a lot of others.
In most.
So I think, once again, that it's a general media coverage because they talk about the market as one, and there's not one market. You can't interpret a market when there's 15,000 suburbs. it doesn't work that way. But to understand the percentages, we first need to understand what the headline numbers are in terms of vacancy rates, and that's what we're talking about now. And the general rule of thumb is somewhere between 2.5% to 3% vacancy rates.
What's a vacancy rate for those listeners that might not be familiar?
A vacancy rate is how many properties are for rent as opposed to the total.
As a percentage of
The
how many
total
available.
number, correct.
Yep. Okay.
So when you have a market of equilibrium, so there's enough supply and enough demand, everyone's happy, it's somewhere between 2.5% to 3% vacancy rates. You get down to a 2% vacancy rate, markets are getting tight. And the power, if you will, is starting to shift towards the landlord, and they might start to consider increasing their rents. When you get to a vacancy rate of 1%, you have an incredibly tight market where rents are rising and there is not enough supply for the demand. So 3.5% is an oversupplied market. Now, there are parts of Melbourne CBD, Brisbane CBD, Sydney CBD, Adelaide CBD, and even Perth CBD that have potentially double-digit vacancy rates. So that is blood on the streets.
Okay, so and that would be high-rise, newish sort of apartments.
Yeah.
That usually have students in them.
Correct. Sort of subpar investment stock, if you will. But as you go out into the suburbs, actually, I'll come back a step. So the national vacancy rate has decreased again. I think it sits at around about 3.2%. So that's if we want to throw everything into the same basket, yeah? But remember, we've got double-digit vacancy rates in some of these CBD areas. So to still have a 3.2% vacancy rate, that must mean that there's incredibly low vacancy rate in other areas. So let's now give some context around that with some truth in some of the suburbs. In some of those areas that I mentioned before that have increased in value during COVID, there are vacancy rates that sit below 1%. And
That's alarming.
Here's an example. A client of ours settled a property, it'd be 10 days ago, whatever it was, last Thursday, let's call it last Thursday. He had his first open home for potential tenants on Friday. There was 35 groups of people through it. Saturday was the second open home. There was 27 groups through it, 14 strong applications with two tenants, let's say, bidding against each other on the front lawn to secure the property. In the same area, another client who hasn't even taken ownership of the property yet has got 22 applications to rent the property. 22. He doesn't even own the property yet. If we go to some parts of Brisbane, there are 2 houses for rent in the entire suburb. And if you extrapolate, or if you start to expand that out and then put into it units, villas, townhouses, it goes up to 8 properties in the entire suburb. Now, that's a suburb within a region, and the region is probably sitting at 1% vacancy rates. Now, this is a topic that the general media are not talking about. Now, whether it's because of negligence or they just don't know, because they're looking at averages or the general market, it's a dangerous scenario that I believe we're moving towards. If something doesn't happen soon, there will be a accommodation crisis.
And that's really important. Hence the reason why we do podcasts like this, because I operate within media. I think media provides a very valuable service to the nation and a big champion of democracy and all that sort of stuff. But the expectation that a general journalist should have that sophistication, maybe not. So it's our job to make sure with the platform that we have, that we actually have these conversations. And I like to think, Steve, that the people who are tuning into this are investing in their education. So therefore, they don't have to make those poor investment decisions based on what they might read in the general media. So you need to be accountable and responsible for sourcing this information. And you chat about housing crisis. So you're telling me there's not enough houses for people to live in?
In those particular areas, clearly, because you can't have a suburb with 2, in that example, 2 houses for rent.
So this housing crisis everyone's talking about is not that property is going to tank, Victor. It's probably the inverse of that.
It's the inverse. It's actually the inverse. And when you go back and have a look at any crisis, immediately after the crisis, there is another crisis that develops, which is your housing crisis, in terms of there'll be a strong decline in the number of properties that are being rented. And because the yields start increasing, your prices start increasing as well.
Sorry, Big, I'm just waving my hand. Pick me.
Yeah.
And this is it, because if we go back to one of the original subjects today about trends, that in itself is a trend. And you've hit the nail right on the head. First, we have an accommodation crisis. Go back to the GFC. Let's just use that as the major crisis comparison.
Because most of us can remember that.
Yeah. So during the GFC, construction stopped, as it has today. Probably the lowest it's been in 8 years as we speak today. GFC was no different, yet population still grows. Be it all today, our international borders are closed, but not forever. Because there's no construction, yet the population still grows, and we've already got this extremely tight rental market throughout scattered areas throughout Australia, then inherently the rents will go up. And as the rents go up, that will, from a commercial aspect, also start to increase prices. Because when it's cheaper to own it than it is to rent it, there's an inflection point that's happening there. And we've talked about this.
Many times.
For what? Now, for the last 12 to 18 months, we've been talking about this inflection point. Go back through a lot of the podcasts and blogs. I would suggest that inflection point is happening 18 months earlier than what I thought it would. And part of our job as data analysts, and even call us demographers to some way, shape or form, and trying to track human trends to know where the market is going to shift, i.e. people are moving from the built-up suburbs today through to the coastal regions still that are commutable to the CBDs, for us was a pretty obvious trend that was going to happen.
We said this very early in the piece.
I think, and in fact, I think we even said it in the video when we were almost stuck in Perth. Yeah.
So is this happening? So this is one of these, call them trends, or it's a dynamic which we're seeing in play right now, is that everyone said COVID's happening, people are realising that they're going to have a more distributed workforce, therefore people can work at home more often, therefore people don't need to be wed or tied to the CBDs or your metropolitan areas, right? That's what the discussion is. You guys mentioned it pretty early on in the piece. Are you seeing it? Is it happening?
100% we're seeing it. However,
like ground truth.
Oh, 100%. Take the Central Coast and the South Coast of Sydney, just because that's where we are today. There's a massive shift from renters and homeowners that are moving to those areas. In fact, I was speaking to an agent the other day and he has not seen it this busy in 10 years. Now, that is not in the mainstream media. It will be. You watch, someone will flick the switch and we will go from a market that is perhaps negatively commented on to something that will be the complete reversal. And be careful. FOMO is going to kick in.
So what you're telling me then is that Right Property Group helped us secure 5 years ago, probably Port Kembla. It's going to be the place to be, because that there is essentially beachfront, right? There's nothing between that and what was voted the most beautiful beach in New South Wales for like 3 years in a row.
Well, let's look at two of your properties. Let's say Port Kembla.
Yeah.
Right. Go and plug in that suburb and the suburbs around it and see what's for rent. I mentioned earlier on that there was 2 properties for rent in a suburb. That was at a suburb next door to Port Kembla.
Yeah.
Now go to one of your other properties on the Central Coast and have a look what's for sale. Plug in that suburb and see how much is for rent. You'll be pleasantly/rudely surprised because of the population shift. But here's the catch. Whilst a lot of people are saying that the regional areas are going to boom, and everybody's interpretation of regional is a little different. Whilst I believe it, we're experiencing it. We've prepared for this for the last, call it 12 to 18 months anyway, and this is before COVID, because of trends in the human nature shift. There will be some areas in the regional sphere that you will see a short-term spike in, but a medium-term contraction as well, because whilst we can all work remotely now, and supposedly there are a few things that we can't replace by working in an office environment, and that is culture. And a prediction, if you will, or an assumption, whichever way you want to look at it, is that over the coming years, we will see the shift back towards the office work environment. Be it all, it may not be 5 days a week full time, but it might be 3-2, 2-3, whatever it may be. But if you've invested in an area or bought an area in the sub-regional, so sub-regional areas for the lifestyle shift, because you can work remotely, and then your employer says, well, we want you back in the office 2 days a week, and then you've got a choice. It's too far to commute, so what do? Do you quit that work? Do you quit that job? And then who's your employer?
Try and find regional employment. And so you need to be strategic about this sort of sea/tree change. So we're talking about 2 locations. We're talking about quasi-metropolitan.
Correct.
You're talking about Wollongong.
Commutable.
And we're talking about Central Coast. So
in Sydney.
Gosford. So that's Sydney. You'd have
and
Geelong.
Each state has.
You have each
Correct.
state would have a very similar.
Brisbane's a little different because it's traditionally all lifestyle. North, south and west.
Yeah. So it's a complicated decision-making environment, Victor.
Yeah. So I think, what's really important is to understand that you just can't look at the current trend and say, okay, that's where I got to be, right? We need to still look at it from an underlying fundamental. Employment is what drives growth at the end of the day. From employment comes supply and demand, and from supply and demand comes value increase and rent increase. So we can't ignore that just because the transient trend because of COVID right now is bringing these areas into highlight. Now, there are a lot of other areas people are moving into as well, which might not be investment worthy. Whereas the areas where they have now got this catalyst were always traditionally good investment areas. It's just now that it's got this new mix and it's making the trend go faster upwards. And it's also making the liquidity of the area a lot more better. Not that it was not liquid before. And importantly, it also will then start changing those areas a lot faster demographic-wise, as what would have taken 10 years to change may now take 4 years to change to that level in terms of demographics.
That's a great point. And that goes back to one of my things I was writing about before about momentum investing, because you can write on the shirt tails of momentum in fundamentally correct metropolitan and quasi-metropolitan areas. But if you go to sub-regional, momentum shifts very quickly. And you might be stuck.
It's a really interesting point. And again, it comes back to the information that you digest. Some of these, when you go further out, like into more regional areas, it's like a cut flower in a vase, right? It's going to look good for quite some time, but it's going to die or it's going to go back to its default position. So the dichotomy, and this is my projection, the dichotomy that both state and federal governments have right now is that they're always trying to inject money into regional and rural communities. That's an objective, to try and get a more spread of the economy, try and manufacture jobs out in these regional areas. We're talking Dubbo and Orange, where you have a lot of state-based or federally based businesses like tax offices and all this sort of stuff, right? But state governments have spent the majority of their money over the last 20, 30, 40 years on making it easier to get in and out of CBDs. Whether it's talk about Sydney, the Sydney CBD, Parramatta, Blacktown, Liverpool, etc. So these micro CBDs, that's where all the money is gone. So my view is that the government is going to want to get Australians back into the offices, back into the CBEs. They're the heart and soul of our economies.
Absolutely.
So how are they going to do this on the basis that they're trying to, it's a catch-22.
100%. I agree 100%. And I've often said, do you think that the government, whether it be state or federally, have poured quadrillions of dollars into areas to not force people to live there?
Yeah.
They will. And although the only maybe a little bit of a different opinion I have on what you just said is that the interpretation of where the office precincts will become. So you might find that your Parramatta's and, in your case, the Parramatta's and the Liverpools and the commercial precincts. Those. Yeah. So as opposed to coming into Sydney CBD or Melbourne CBD or Brisbane CBD or Perth CBD, I think we might see that change, because there's no doubt the technology, without doubt, has a massive impact in combination with COVID. It was that catalyst for us to think differently, without doubt. We had an uplift so we had no fall in production, if you ask really any employers. However, it might get to the stage where the production does start to suffer as people become more complacent at home.
Also, one of the biggest health challenges in the Western world is loneliness.
Absolutely.
It's a huge issue, and I think, we're employers, so we have people that work within us. We have accountability and responsibility to make sure we create a workplace which people get value out of, as all others. It is a huge problem, loneliness. And as the world becomes digitized, it gives people the opportunity to isolate, and in a COVID environment, that's a good thing, but it's not healthy. It's not healthy by any means. Humans should be together. Humans should be together.
Exactly. If you're an introvert, you're probably loving it at the moment, but you will get over it.
You get over it.
I'm a firm believer in what I call the collective. And the collective are the people, the immediate people around you, whether they're work colleagues or not. And if you isolate yourself too much, you're left to your own thoughts.
And the headlines take effect.
And exactly, whatever's in front of you, which is usually social media.
It's part of the wrong trends that you're going to start.
Yeah.
As opposed to being around the right people. As people, you're a sum of who you hang with.
It's not too good for you, mate.
I know. Look at my company I'm in today.
But it's
We're trying to pull you up.
But we could easily do this over Zoom, but we make a choice that we come together. And the product of this hour we get to spend together is so much more satisfying.
Without doubt.
Yeah.
And it's...
Plus we get free coffee.
Plus you get free coffee.
Yeah, parking's...
It's, I thought you said FARKING just then. It was with a P. It was like, it had a small closed loop Blacktown twang there, mate. But it sounded like an F.
But I think if we come back to the trend, as people awake from this COVID hibernation mentally, and unfortunately there will be some mental issues as a response.
Big challenge, yeah.
Look, the shine will go away from working from home.
Correct. People will want to be a part of each other's company, the collective, as I keep saying. And that will be, as I said months ago and tried to get momentum on it, is the new sea change, which hasn't been picked up, but I'll keep trying.
Okay, what I want, Victor, from you is a nice, big, fat, juicy headline around housing crisis, which is the inverse to what everyone else is saying is the housing crisis. Give it to me. Give it to me straight.
Right now?
Right now.
Right now? I say, the trend is what you think it will be.
Yeah.
Yeah.
Ooh, that was pretty good.
I know, it's very deep.
Philosophical.
Yeah.
So the housing crisis is there's not going to be enough housing.
Yep, that's it. And
So when migration starts again, when international students come in, so right now we're at a moment in time which everyone thinks is going to be the norm moving forward. This is just a small window,
That's true.
It's a window of around, I think, truthfully, 6 months.
which is a very small time in property.
Very, very.
Oh, very
Yeah,
small.
blink.
And the headline, told you so.
And if you look talking about like housing shortage, right? We were already in a shortage before we went into COVID, and now it's been amplified. So there will be a spike in terms of shortage, in terms of increasing rent, increasing value. Then there'll be incentives to bring more people in, overseas migrants, and also build more properties. So it'll then go up and get to in some areas, oversupply situation.
Correct.
And then there'll be all doom and gloom again. So that's
It's just the
trend.
cyclical effect of property. And I know there's probably some people out there listening saying, yeah, but what about employment and what about immigration? Fair points. But even if it stays the way it stays today, that doesn't mean that suddenly all this new houses appear out of nowhere to provide accommodation. That's not
Miraculously.
Yeah, that's not going to change. But we do need employment, and we also need immigration to make the economy wheels spin within, so to speak. But I just think that, whilst we say that there are areas of undersupply, and we're seeing that in the vacancy rates and our rents starting to climb, conversely, there's also areas of oversupply.
Even today.
Even
We
today.
probably should get into that, but we'll do that in another podcast. I think we've done quite well there today, guys.
Apart from the sledging, I actually feel like I need to speak to a counsellor now.
It's not sledging,
It was just counselling.
it's just counselling.
Taken from
It's
a man in a
endearment.
pink Ralph Lauren shirt.
It's endearment. It's endearment. It's good. But I hope you enjoy that, everyone. Please, we love the feedback that's coming in, and I get a real kick out of it. It's a real privilege of mine to be able to record this with Steve and Victor. So I normally get that feedback secondhand, but if you can leave those reviews, please, on the podcast, wherever you listen to it right now. If anyone wants to get in touch with us, Victor, what's the best way?
It's questions@rightpropertygroup.com.au, and do go and follow our page so that you can get alerted for our Facebook Lives. We do them every second Thursday.
And I recommend doing that. They're pretty good. The content, the delivery's so-so, but the content's pretty good.
It's a bit like this podcast, really, isn't it?
Gentlemen, thank you so much. It was a good chat. Look forward to next month as well. And if there's any particular topic you'd like us to cover, we can pretty much handle anything. We can, as long as we've got a bit of a notice, we can research up on it. Questions@rightpropertygroup.com.au. We're in your hands. Let's just pretend you get to set the agenda for the next podcast, and we'll make sure whoever comes up with that topic, we give them a bit of airplay as well. So happy to do that. Thanks for joining us today. We'll see you next time. Until then, bye-bye.
The information featured in this podcast is general in nature, does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you.